Hey there, welcome back to the channel where we dive deep into what's really going on in the world of finance. Today we're tackling a hot topic, stocks. Yep, those little numbers that seem to be reaching for the stars lately. So let's break it down. You might have heard that stocks are hitting all-time highs, right? Well, it's true depending on which data you're eyeballing. But here's the thing, it's not all sunshine and rainbows once you start peeking under the hood. Sure, you can get lost in a sea of fancy terms like PE ratios, price to book, price to sales, and more, but let's keep it real simple today. At the core of it all, it's about one thing, money printing. Yeah, you heard me right. When you pump out more cash, you're essentially playing a game of Monopoly with real-life consequences. Prices start climbing and suddenly that funny money ain't so funny anymore. Now, there are folks out there who will tell you that printing cash and devaluing currency are totally unrelated. But seriously, what planet are they living on? 'Cause sign me up for whatever they're having. Take a look at the market. It's like a Wild West showdown out there. You've got big players like Nvidia and Meta strutting their stuff while the rest of the gang is barely keeping up. Why? 'Cause everyone's got their sights set on AI. And hey, I'm all for embracing the latest trends, but let's not forget to peek in the rearview mirror once in a while. Remember when Facebook was all about the metaverse? Yeah, that was the talk of the town. But what happened? Stock went on a roller coaster ride, plunging and then soaring, all based on the whims of the market. It's like a psychology experiment out here, folks. Money moves in mysterious ways, and if you want to keep up, you gotta stay sharp. Ever felt like you had it all figured out, only for everything to flip on its head? That's the thing about speculation. It's like the foam on your beer, or the crema on your espresso. Sometimes it's just a little extra fluff, but other times, it's more than the drink itself. Take Bill Gross, for example. This guy's a straight shooter. He'll say what's on his mind, no matter what. Bonds, stocks, nothing's safe from his scrutiny. And you know what? He's got a point. Bonds are drowning in supply, and that's a whole can of worms we'll save for another day. But here's the kicker. It all boils down to one big issue, the old fiscal deficit spending. Yeah, it's a mouthful, but stick with me. See, when Uncle Sam starts splurging and everyone's hyped up about AI, well, things get a little crazy. Momentum takes over, rationality goes out the window, and suddenly we're riding the wave of irrational exuberance. Sounds like a wild ride, right? So, next time you're sipping your latte or cracking open a cold one, remember, sometimes it's not just about what's in the cup, it's about the froth on top. And in the world of finance, that froth can make all the difference. Let's start with a little reality check. See, there's always something new grabbing the spotlight, like the flavor of the day. And hey, there are winners in every race, right? Take Nvidia, for instance. We're not saying they'll be worth zilch tomorrow, but when we start thinking they're invincible, well, that's when things get shaky. Now let's talk Tesla. Oh boy, that's a roller coaster ride if I've ever seen one. Is it Elon Musk's latest stunt, or the fact that they can't churn out enough Model Ys? Who knows? Drop your thoughts in the comments, cause we're itching for a good debate. And then there's Goldman Sachs, painting a rosy picture of megacaps taking the S&P 500 to 6,000. But hey, if we keep printing money like there's no tomorrow, why stop there? Let's aim for the stars, people. 10,000 anyone. Shoot for the moon and all that jazz. But hold on to your hats, cause investor John Hussman's ringing alarm bells. According to him, we're staring down the barrel of the most extreme bubble in history. And hey, this guy's got a track record, so we might want to listen up. Let's pump the brakes for a sec and talk about overvaluation. It's like when you're blowing up a balloon, and suddenly you realize it's about to burst. Yeah, not a fun feeling. These days we're seeing a lot of metrics pointing in the same direction. Stocks shooting up like rockets into the sky. Now don't get me wrong, seeing your investment soar can be thrilling. But when it's shooting straight up, it's usually a red flag. Think about it like this. Imagine you're climbing a mountain. You don't want to sprint to the top because you'll burn out fast. Slow and steady wins the race, right? Well, the same goes for stocks. A nice steady climb is what we're aiming for. And hey, if you've got some cash stacked up, cool, but let's keep it humble, folks. Bragging about your gains in the comments section? Nah, not cool. Cause in the grand scheme of things, that stack might be a drop in the bucket. So where's the real action happening? Follow the big money trail. Those whales are the ones steering the ship, driving the speculation train. It's like a game of follow the leader, and trust me, you want to follow where the big bucks are flowing. Now let's talk liquidity. It's like the lifeblood of the financial system, keeping things flowing smoothly, but how do we measure it? Well, that's a whole other can of worms we'll crack open next time. Alright, let's take a peek behind the curtain and see what's really driving the stock market. We're talking cold, hard cash, folks. Now there are a few key indicators we keep our eyes on. Currency in circulation, reserve balances at the Federal Reserve, and all that jazz about quantitative easing or tightening. It might sound like a snooze fest, but trust me, it's where the magic happens. See, all this data paints a picture of whether the market's gonna soar to new heights or take a nosedive. And here's the kicker. It's not always about AI or computer chips. Nope, it's about that sneaky layer of speculation. Now hold your horses. Speculation isn't all about rolling the dice and crossing your fingers. It's more like a game of hot potato. People buy in, sure, but they're also eyeing the exit, waiting for the perfect moment to cash out. And guess what? It's not just your average Joe doing this dance. Nope, it's the big players, the companies with dollar signs in their eyes, looking to cash in when the time's right. So, how do we gauge all this madness? Well, it's all about the money mirror method. Yep, you heard me right. It's like holding up a mirror to the market, comparing the total market cap with those reserve balances at the Fed. Ever heard the phrase, where there's a will, there's a way? Well, in the world of finance, that rings truer than ever. But let's rewind a bit and unpack what's been happening. So picture this, the Federal Reserve, the big shot in charge of setting interest rates. Now you'd think when rates go up, things would tighten, right? Wrong. Turns out the conditions have actually loosened up. Yeah, I know, it's a head scratcher, but here's the kicker. All this maneuvering isn't happening in a vacuum. Nope, there are players in this game, and they're reaping the rewards. We're talking about the big shots, the top dogs, the cream of the crop. And since 2020, they've been swimming in wealth like never before. Just take a look at the charts. The folks at the very top, yeah, they're laughing all the way to the bank. But hey, let's not paint the picture entirely bleak. There's some good news too. Check this out. Intel snagged a sweet deal worth $8.5 billion to beef up their chip game in the good old US of A. With all the semiconductor buzz lately, it's a smart move. But let's not forget about the underdog here. While AMD's been holding its own, Nvidia's been stealing the spotlight, and then there's Intel lagging behind. But hey, every dog has its day, right? Maybe they're just biding their time, waiting for the perfect moment to strike back. So picture this, the world stage, a battleground of sorts, with countries throwing punches left and right. Take China for instance. They're saying no thanks to Nvidia, AMD, and Intel, and bam, those stocks take a hit. But hey, it's not all doom and gloom. There are winners and losers in this game. Amazon and Google, yeah, they're playing it cool, dialing down those wild AI expectations. And then there's Apple having a bit of a nightmare year. Ouch. But here's the thing. Amidst all the chaos, speculations running wild, news articles left and right, hyping up the market. And let's not forget about Bitcoin, quietly doubling up from 16,000 to 30,000 without a peep. Now that's what I call a silent success story. But you want to know something? I prefer it that way. When nobody's paying attention, that's when the real magic happens. It's like being the lone wolf in a sea of sheep. Tricky, but oh so rewarding. So here's the deal. If you want to dive deeper into this crazy world of finance, join us every Friday for Finance Friday. It's 2 hours of straight talk with some of the sharpest minds around. Trust me, you won't want to miss it. And hey, if you've enjoyed this ride so far, hit that thumbs up button to show your support. It means the world to us. Until next time, stay sharp, stay curious, and I'll catch you on the flip side.